we were underwriting hundreds of deals every month. I mean, just tons and tons of deals. And one of the things that we really focused on during that time was how much skin in the game sponsors are going to have, after they had refinanced into a CMBS loan. Typically what we saw is those deals that went into special servicing. I mean, the sponsor either had a very significant or in some situations, a total cash out refi. And, they were very willing to hand over the keys on some of those deals. And I think that's definitely followed through with how I look at and how our team looks at any equity investment opportunities we have on this fund, is making sure our sponsor partners have significant skin in the game. I feel like we've been hearing about this wall of maturities for 2 years now. The last probably 12, 18 months, we've been talking about pretend and extend a little bit more. I will say that folks are getting a little bit more optimistic. Finally got our first round of rate cuts, which was great, but obviously hasn't translated to a positive impact on the 10-year, which has been a little bit of a stressful situation for us. But, I will say we have seen a lot of recap opportunities on the fund. So whether that is a group that developed a project that has a loan maturity coming up, they're just behind the curve on lease up and stabilization, and they're trying to recap out a pref partner. We've seen a lot of things like that. We've seen a lot of groups buying deals from groups because, they're kind of underwater on the mortgage. I don't think we've seen the level of distress, though, that we necessarily thought we were going to see. Give affordable units for a long period of time, and you get a property tax abatement, you get a sales tax abatement on materials. It's a really accretive way to create more affordable housing stock. And then we're seeing similar things. I mean, Florida has the Live Local Act. In North and South Carolina, they've got a very similar program, but I'd say it's geared more towards value add acquisition rehab, but it can be used for ground up construction. And so we're seeing really compelling opportunities where governments are stepping in and creating proper incentive programs, because I think people have finally realized that, yeah, you can say developers are greedy all you want, but if there's no economic incentive to do a deal, a developer's never going to be able to raise the capital to create more housing supply. Your urban infill core class A stuff that you're kind of targeting upper income earners, everybody that lives there makes six figures, right? And then you've got your low income housing tax credit deals or your Section 8 deals. I think what's really cool for us is when we go to a market and you say, we've got a deal, for instance, out in Ridgeville, South Carolina, and you look there and people say, well, what is Ridgeville? But when our partner brought us this deal, we looked at it and said, man, there's a 2 million square foot Volvo plant there where they're building all the XC90s. Polestar is going to start, this back then, Polestar was going to start building cars there. And then you've got this massive industrial park that the state utility company has owned and developed. There's tons of jobs coming out in this area, and there's no housing at all, not workforce housing. There's no housing. You had to drive 15 to 20 minutes away to be near any housing. And our partner brought us a great site. There was a wetlands mitigation plan. And they said, hey, we want to build 240 units here. We think there's a need. And we loved it. And I think the more you see the industrial sector grow, there's a lot of great lenders out there that really focus on this space where you can get really competitive interest rates. So I'd say, be diligent, but if you build it, they will come. From Field of Dreams, I mean, there is just not enough supply to keep up with the demand for this type of housing in the South. And so I'd say to anybody out there that, is looking to kind of move into development or is in development, or maybe they're in market rate housing and they're seeing concessions skyrocket across their portfolio, there is a segment of the market that you can play in where you're not going to deal with those issues. There's certainly other challenges that we face in this space, but I think affordable and workforce housing is an incredibly compelling investment opportunity, and we need more people to come into this segment of the market if we're ever going to get close to achieving, a kind of a supply and demand balance.